Climate Takes, Carbon13's podcast where we ask our special guests for their takes on their industries and climate challenges, as well as setting a call to action. What is it going to take to fight the climate emergency? On this episode, I'm delighted to be joined by Charlotte Kirk, who will be sharing her journey from PhD to CVC to VC. A lot of climate is deep tech investment, and the importance of VCs who understand this area cannot be understated. So for this episode, Climate Takes, Deep Tech Investors.
For a scientist to thrive in venture capital, certainly my answer for aspiring founders would be to have those grit factors. So I set up our corporate venture capital fund, which was $100 million. Here you really have seconds to grab investors' attention. You need to have your elevator pitch nailed down. What problem do you solve? How do you do that? Why are you uniquely placed to win? Founders sometimes focus too much on technology and not enough on the commercialization and the scale up. And then as investors, we need to be more selective about which early stage startups are worth pursuing, and then focus on how to best scale the most promising solutions.
Charlotte, welcome. Thank you so much for joining us.
Sarah, thanks so much for having me.
I am really excited for this episode. I knew I had to have you on the podcast because you do have a PhD in chemistry from Oxford, I believe. And so much of the startups that we see in climate tech are IP-led, science-based, or what we would call deep tech or hard tech. And so we need expertise from investors in the problem set and also the solutions. I think that's fair to say. But I think we want to look at your journey to becoming a VC from being a scientist, but also look at how you're applying that skill set as a VC, what you want to see from founders, and also how you view the technical due diligence process of an investment. So that's all coming up. But I think first, Charlotte, small question. Tell us about your journey to being a VC.
Yeah, well, thanks again for having me. So I guess my climate journey started when I did my PhD at Oxford 10 years ago now in hydrogen and ammonia technologies. And I quickly realized that the best technology means nothing if it doesn't get out the lab and it doesn't commercialize and scale. So I went to work for a strategy consulting in London for a few years, and I led their renewable fuels and products, industrial decarbonization work. So that was helping early stage startups on their commercialization strategy, working with corporates on what their innovation roadmap should be, and also working with policymakers on how to develop policies that enable the best technologies to scale and commercialize and make a difference in the world. And it was through some work I was doing for the European Commission about future trade of renewable fuels that led me to Fortescue, the fourth largest iron ore exporter in the world, based in Perth in Australia. And that might seem alien to a lot of people, but you think about iron ore, it's a very heavily emitting sector, but the founder, Dr. Andrew Forrest, is very passionate about decarbonizing with renewable energy yesterday. And when you break it down, it's very relatable to the industries we talk about all the time. So power decarbonization, we're building 2 gigawatts of generation, distribution, and transmission in the Pilbara. A lot of focus on long duration energy storage, how to manage the intermittency variability, heavy transport decarbonization, just that our trucks were massive and funky looking, but battery electric vehicles, fast charging, fuel cells, ammonia ships, ammonia trains, and heavy industry decarbonization as well. Green iron, green steel was a big part of our emissions. And we had a portfolio of hydrogen-based production projects to sell ammonia or potentially even synthetic aviation fuel into other people to help them decarbonize as well. And so my role as head of technology was to make sure that we had the right technology for our projects, developed it where we didn't. So we built the world's first ammonia-powered ship, which we took to Dubai for COP and had Kerry on board, and it's now in London, which is very exciting. But also that we invested for the next wave of innovation. So I set up our corporate venture capital fund, which was $100 million, to invest in seed Series A technologies that enable deep decarbonization and industrial transformation. And we also invested off the balance sheet as well. And I knew that I wanted to get into financial VC, sort of really being at the forefront of translating that deep technical knowledge, nerding out with those founders into language that people who can write those checks, develop those policies, really make a difference can do. And I think especially at early stage, as technology innovates and scales, it's inextricably linked to the deal itself. And so the ability to lead deals and have greater flexibility, sort of autonomy in the decision making, not always being tied to a strategic, is attractive. And so I joined Clean Energy Ventures in September. So it's an American-based venture capital fund. Initially, it was a group of angels investing in the Boston, Harvard, MIT area. They did very well investing, so raised the first fund with external capital, was $100 million to invest in North America. That fund did very well, and so the second fund closed in last year and expanded from North America to include Europe and Israel. So I came on as part of that, opened a London office, and so I, deal source amazing technologies across Europe, manage some of our investor relationships and co-investor network, given I've sort of lived in Europe for a long time and know a lot of the people here. And we have 2 investments here in Europe already, a SAF company in Oxford and an ammonia company in Israel. So that's my journey in a nutshell, from, PhD to CVC and VC. Had times in the army at various points, was a professional triathlete for a little bit, but that's a story for another day.
I was going to say, and you found time to be a high performance athlete at the same time. I think that, really resonates with the Carbon13 world, because we literally were conceived to bring together the science knowledge with the commercialization knowledge to scale those technologies. So that's very much the essence of Carbon13 as well. And I think demonstrates just how useful scientists can be to net zero, where it's not just about being in the lab. There's so much that you can offer in the corporate world and the investment world as well. So that's been your journey so far. Second difficult question. What's your take on VC this year in 2025? Because I feel like it's quite an interesting, pivotal year.
Yeah, I think that it's exciting that the energy transition is gaining real momentum. Even the most challenging sectors now have a line of sight to decarbonisation, but the paths to get there are unclear. And there's heightening geopolitical tension sort of across the world. And so I think that we're at this pivotal moment, like climate tech is at this new phase where progress and scale up sort of mean that we have to bring together new ideas, new financing, new execution. My background is technology. That's what I love. And yes, there are hurdles in technology development. But to be honest, I think often a lot of the challenges some of these startups are now facing is more on financing first of a kind projects, the need for clarifying policy and regulation, and sort of shortening infrastructure timelines. And so, it's clear that collaboration is what's needed to sort of try and overcome those and accelerate the commercialization of those climate technologies.
Which I think is why your background is so interesting, because I think software VCs would not have been sat here saying we need to worry about direction of policy, shortening infrastructure times, etc. Whereas you've had that experience at Fortescue. It doesn't get much more industrial than iron ore mining.
Yes, exactly. And I don't have a B2B SaaS background, which is traditional venture capital. I have come at this from the need to deploy capital intensive hardware. If we are going to displace fossil fuels with renewable energy, we simply need to build a lot more renewable generation. We need to focus on how to get renewable electrons onto, across, and off the grid into the most heavily emitting sectors. And that just means building a lot of stuff. And that takes time. And fossil fuels, unfortunately, are low cost in many industries. And so I think what's exciting and what climate tech is going to need to do this year is show sort of dual benefits. And that's very clear. There's a lot of energy security benefits and sort of defense tech parallels with a lot of climate tech. Distributed generation enables energy security. A lot of critical minerals extraction refining means that you can onshore manufacturing and supply chains. And so sort of rephrasing something as simply being a climate solution into having this primary benefit being something else and the climate being a co-benefit is, I think, what's going to happen. Climate tech itself is not really in vogue, but we're still very clear that these technologies are going to be needed for deep decarbonization.
It does feel at the moment that you can say noun security instead of climate tech. Energy security, food security, supply chain security, etc. But which I think I view it as a maturing of climate tech, where we're now actually starting to talk about more of the nitty gritty and how we actually do it. And it's more meaningful conversations when it is more granular. But also, and I cannot overstate this enough, the climate emergency is still very much extant and getting worse every year. The founders that we see coming through Carbon13, climate is still one of the most motivating factors for their decision to start a company, so we still need that momentum of caring about trying to do something to adapt humanity to the coming climate crisis. And I think as a personal motivation for founders, we can't overstate that. So, I've sat in a room, Deeptech investors have said, okay, what do you look for been asked, what do you look for in a team? The founder mission fit is still actually as crucial as ever, where you really want committed founders. And those founders in climate are committed because they are trying literally to save the world. And actually, we do want to see that as Deeptech investors, that mission fit is actually crucial. There was a couple of things you said, which I just want to pick up on. How are you seeing, as a VC, are you seeing the exits for climate tech at the moment?
Yeah, I mean, I think it's an interesting question, and clearly a very important one. Successful exits are obviously integral to venture capital, unlocking that game-changing value for both the investors, but also the entrepreneurs and the foundings themselves. But for this new wave of climate tech startups developing hardware and physical infrastructure, exit strategies can be less straightforward than typically seen for software companies. Companies are often further from profitability, given their sort of capital intensive innovations. They might have to navigate longer timelines, more complex paths to that unicorn valuation. But also the sector remains relatively new, and there's limited successful exits in recent years, like either via M&A or in the public markets, given sort of the broader macroeconomic challenges and like geopolitical issues. And so I think that companies, what I'm seeing is sort of exploring alternative strategies, maybe to remain private longer. And so they're needing to be more creative about structuring and negotiating sort of for optimal exits, how to strategically plan to realize that long-term value creation for everyone, including the planet. And so I think what I'd say to founders is it's really important to proactively plan for that exit from the outset. Setting goals, establishing, measuring KPIs that inform the strategy, alongside, refining your business model to tell that compelling story. And so, like, along the journey, fostering strategic relationships with potential acquirers, you can hopefully ensure that ideal exit timing, and sort of align on valuation expectations, ultimately to best position your company to drive that maximum result.
We have our applications open to our accelerator at the moment, the Venture Launchpad. And when I'm trying to sort of explain the focus of it, I'm trying to say to founders, we ask you to look up, because when you're very early stage, you're looking at the immediate challenges in front of you. And our accelerator gives you the chance to look up and say, okay, actually realistic exits for this look like this. And we're going to need to understand the journey to that point, and to talk to people who can say, okay, this could be a potential path. This is maybe a 5-10 year path that you're starting, but it's trying to ensure you've got a confident first step down there. I think that's very important. You also referred to time. And in climate in particular, how are you seeing the tension between incremental innovation that corporates do well with breakthrough that VCs do well? Why is time in particular important to climate investing?
I mean, it sort of comes down to the time value of carbon, right? And the short answer is that we need both radical innovation and deployment today. Some sectors do still need more moonshots and like fundamental research. Others need focus on commercialization and deploying the technologies we already have that are mature today. And I think that founders sometimes focus too much on technology and not enough on the commercialization and the scale up. And then as investors, we need to be more selective about which early stage startups are worth pursuing and then focus on how to best scale the most promising solutions. And so I think that the where corporates come in is that they can play a transformative role in the energy transition. They can help, accelerate the development deployment of any revolutionary climate technologies. They can advance in innovation, drive collaboration, all that kind of things. They have financial resources, market access, expertise. And so, but they aren't driven by financial returns and they don't have a short timeline. So, one example I often describe is the two projects that we had at Fortescue. One was a green ammonia project. And green ammonia actually isn't something new. The concept of taking electrolytic hydrogen and putting it into a Haber-Bosch reactor was first done by Norsk Hydro hundreds of years ago. We only stopped doing it because natural gas became so cheap. So the technology exists. Yes, it can be innovated on to now deal with intermittent renewable resources, but fundamentally it exists. What we need to do is deploy these things at scale. And so, we applied to the innovation fund, and the innovation wasn't per se around the technology. It was bringing them together, the business model, having a long-term PPA, having a long-term contract, and bankable offtake partners in order to get that project finance around it. A lot of these markets aren't commodity markets. Even ammonia today, fossil ammonia, it's a global commodity, but it's not a liquid market. And so we're having to sort of transition from these commodity markets to these bankable projects in order to get the financing on board. And H2 Green Steel is a good example of doing it well, where they've brought in long-term offtake locked in before the plant has even produced the steel in order to get the credit worthiness that the bankers and the infrastructure players need. So innovation can be much more than technology is what I would say from that. And in terms of the deploying today, I mentioned the Green Pioneer, the world's first ammonia-powered ship that we built at Fortescue. We did that in 4 months. We retrofitted an existing ship, 2 or 4 4-stroke engines to run dual fuel ammonia and biodiesel. So at the point of at the tailpipe, if you will, that is a net zero ship. And we did that in 4 months, like I said. We didn't. Yes, man are developing water slur, WinGD. Engine developers are building new, hopefully zero emission engines, but we have an existing fleet, be it in marine, be it in aviation. We just have a lot of existing infrastructure we can't ignore. And there are solutions today that we can work with what we've got. And like I say, that time value of carbon means that a ton of CO2 that we can abate today has much more impact than a ton in the future. And so I think as investors, operators, founders, as humans in the world, you have to hold 2 things true in your brain. One is what can we do today that can make a meaningful impact that is often not the most innovative, not risky technology because you need that project finance behind it. But simultaneously, what can you invest in the next wave of innovation that can be potentially swapped in the future or deployed at scale in the future that might be more of that breakthrough solution?
And this is why I think your background as an investor for Deeptech is so interesting, because you have actually been there and done that. You've not done your own startup, but you have done from the beginning really complicated infrastructure projects and got them off the ground. And you've seen those commercialization challenges up front and just how they're just so unique and complex to each project. And and you've seen that basically. So I think when we look at, okay, so you're looking at a startup and you're bringing your background to, should we be bringing this startup to investment committee, or even should I be having a second call with these guys? Can you please give me a basic 101 on what a technical due diligence process looks like? What are you looking for in an initial conversation? But then also when things are getting really serious, you're all ready to sign the term sheets and you're doing the final due diligence checks. What does that look like?
Okay, so as the 101, I guess, what is diligence? It's that rigorous evaluation that determines whether the venture capital fund will, or the investor will invest in that company. And so who does it? It's firstly the deal team within the VC firm. And then internally, you have an investment committee. So the general partners or the people with the fiduciary responsibility who will have to sort of sign off on the decision. And then sometimes you might consult with external experts or consultants if there's sort of specific areas. So it's those parties working together. And then how does it work? That's the big question. And one thing I've certainly learned is that everybody does it differently. And the process can also look differently within a fund for different deals. But in general, it starts with the screening stage, initial review of what the opportunity is, a quick assessment of the pitch deck, a call with the team. And here you really have seconds to grab an investor's attention. You need to have your elevator pitch nailed down. What problem do you solve? How do you do that? Why are you uniquely placed to win? And the aim at that point is simply to get to the next stage, the next call. And so, once you've got a VC's interest and you've made it to that next stage, they'll start to do their in-depth analysis. And there's certain buckets of things that I'll analyze in detail, not necessarily in this order, but, firstly, the commercials. What's the market opportunity? What are the market drivers, the challenges, the trends, the size? We talk about the TAM and the SAM and the SOM. What share of the market can they realistically get? What is the size of the opportunity? Then the technology and sort of the product itself. How does the company solve the problem? What product are they offering? Yes, the core technology. How does it work? What are the challenges there? But also on the manufacturing and the supply chain for that scale up. It'll probably include a review of the IP and the strategy for that, as well as sort of a DD on any projects where that technology is being used, be it ongoing or in the future. It might include at this stage sort of a competitor analysis. Who else is on the market? Why is this company uniquely placed to win? And then there's the business model. How does the company currently make money, or how do they plan to make money? Depending on the size of the company, you might include a revenue model, a pricing model, sort of a sales strategy. You'd certainly look at their traction to date and sort of their traction towards commercialization, binding offtake agreements, customer traction, analysis of those customers, what purchase orders do they have, what revenue, really what demonstrable willingness to pay is there for what they offer. And I think, and then team, is crucial to the success of a company. And so we'll look at the founders and the management team. How is their experience relevant to their roles in the company? How do they build and foster a team dynamic? What is their hiring plan? Why is, at the end of the day, you really honestly invest, especially early stage in the team. And so how is that team set up for success? The other things that are really important are obviously like legal, financial, and tax. The extent to which you do DD on these things looks very different on the size of the check, the stage of the deal, what your role in the syndicate is. And there very well might be experts you outsource that to as well. And as a VC, you're doing all of this to go into an investment memo that will be presented to your investment committee. And so the final sort of very important part is the deal itself. A great team can have amazing technology, but venture capital is one specific type of funding that in most cases role is to return money to its limited partners with those outsized returns. So the key questions that are being asked are, what is the deal? how much are you going to invest, for what percentage of equity stake, what is the pre-money valuation of the company, what are the valuation scenarios, the key assumptions that have gone into that, what are the proposed terms of the deal, the milestones for the raise, and then, perhaps most importantly for VCs, what are the exit plans and return potential? Who will buy the company? What milestones does the company need to hit to get there? How much will each of those milestones cost? What runway will they need to get there? And so at what price can you expect that 10x return?
Because what you've articulated is really a startup founding team is building two products. One is the actual product, but then the company itself is a product. And VCs are trying to sell this product for a higher price than what they bought it for at the end of the day. And I think if you're trying to construct a pitch to VCs, you need to understand above all else, that's how a VC will be looking at your startup. IP, let's go into that. What are some green and red flags when looking at IP? Anything from patents or like what, or even, okay, it's not formally patented, but you're like, okay, that looks like it's going to be sufficient to be defensible, or
I think that certainly when you're looking at sort of pitfalls in DD for certain founders, one of the big things I would say is, especially in deep tech and hard tech, is don't have IP issues. Make sure it's all registered and filed properly. Make sure you own the IP. And I'd say just, be communicative and transparent. Don't hide anything. I think that, failing to acknowledge any potential weaknesses or risks can damage trust, and that's ultimately what you're trying to build at the end of the day. So, be upfront. These investors are going to be with you for the long term, and they are your partner in many ways. And so, when it comes to IP or anything else, be prepared. Have a good data room. Have it with clear sections. Have it sort of ideally mapped into those buckets I described above. Don't have any sort of disorganized or conflicting data. But do recognize that a lot of hard tech and deep tech VCs, invest based on that IP moat or based on, that defensibility. And so IP will be a big part of many VC funds' diligence process.
Okay, interesting. And again, a slight difference to what you might have heard with, say, out and out software VC. I mean, look, they're looking for defensibility as well, but it's not going to be IP based. I think when people hear due diligence, they probably think, okay, yes, the tech works, et cetera, et cetera. I don't think founders realize just how much due diligence is done on the team. At Carbon13, as I said earlier in the podcast, we're trying to put scientists and developers together with commercial brains. How do you view an ideal deep tech team? But also, what would due diligence on the team look like?
Yeah, I mean, I think venture capital at the end of the day is all about the team. The technology obviously has to work. The market pull has to be there. But out of all of the 5 T's, team, TAM, timing, tech, traction, team comes first in most stages, especially at early stage. So I think my advice to founders, if you're like me and you have a PhD in a relevant subject, you're a scientist, you come from an engineering background, you have those deeply quantitative analytic skills. Tick. That obviously has to be there. But for a scientist to thrive in venture capital, certainly my answer for aspiring founders would be to have those grit factors. Honestly, a lot of sort of what I learned from my days in the infantry and the army. I was actually talking about this with the Regen team back in Australia recently, and they describe it as the dog mentality, which is a term they've taken from the NBA and basketball. But basically it means having that relentless drive and like unwavering dedication to achieving success. Like that's what building a startup takes. And I think that resilience is key, that ability to stay focused and driven, even in a challenging situation, which will come. and adaptability. You will pivot multiple times. The technology on your seed deck is not what will IPO. And you'll have to pivot through choice and through force. And what's crucial is maintaining that team cohesion throughout. Being a CEO means being a leader, not a manager. And you have to inspire every team member to support each other to want and to achieve that shared goal. And I think that how you diligence that is hard, especially for people who are very quantitative in nature. It's relatively easy to understand the second law of thermodynamics and if a technology could or could not work from a physics and chemistry basis. But understanding how individuals in a team operate and how they fit together is non-linear and often a gut sense. And I don't have a good answer for how to diligence it. And I think it's also true that, the best team will have to iterate over time. It's rare that there are rockstar CEOs who are both technically minded at early stage and commercially minded for IPO and late stage, but they do exist. And so I personally like to spend time with the team in the office, see how they, in the army, I used to describe it as see how they operate when no one's watching, when, how do they treat other people around them? What is the culture in the office? How do they act at dinner in the evening? What did they do on the weekend? Because that is the true essence of who someone really is. And when things go wrong, when times get tough, that is the individual that will come out. Like that's the true character that can't be masked. And ultimately that is who you're dealing with. And so understanding that, like I said before, I think an investor founder partnership is hopefully for the long term. And so spending time and understanding that your values, your principles, your vision is aligned is crucial. And I'd say that as much as the investor should do that on the founder should do that on the investor as well, because you are giving some equity to that investor. And I think that it is important to find investors that not only provide capital, but also whose values sort of align with your long-term vision. So yes, as a founder, do your DD on your investors' track record, their reputation. I'd say the individual that you're planning to bring on more so than or like as much as the firm. Are they a good cultural fit? What are their value add capabilities? How do they operate? If you are that rockstar team with incredible technology and this massive market pool, you shouldn't struggle to find investors. And so don't settle on the wrong one, because hopefully it'll be that partnership. And I think it is a plus-sum game, and the right team with the right investor can have that massive impact for the planet as much as everyone else.
I think there's a lot we can learn from the army recruitment process in that context, which is they really do. They spend time with you. I believe you will go to army dinners and things like that because they want to get to know you as a person. Because they know that what you're about to embark on is incredibly challenging. It's not about whether or not they like you. It's about whether or not they think this is the best choice for you, because they're able to pattern match that, having seen it before. And again, it's a vital part of Carbon13's approach to investment as well. Through our programs, we'll have worked with these founders for 6 months before we're investing in them. So we're able to see, okay, how is the team working together? Do we think they're aligned? It's not even just on the skill set, as I say. It's like, do we think they actually want the same thing? If I'm talking to two founders of the same company separately and they're both telling me very different things about the future of the company, it suggests that they're not aligned, and it's very difficult to overcome that tension. This is, raising investment is a really serious contract to go into. And if you wouldn't work with those people, why would you go into a contract with them? And it does go both ways, as you say. And I think also as well, if you're a team, often deep tech founders, the team might be slightly larger. You probably see that too, Charlotte. So even at pre-seed, we might see 4 founders or so. And Um, it may be that, one of you is leading the engagement with the investor, but the investor will need to spend time with the other three founders or whatever at the same time and understand what they bring to the table as well. I saw a VC say, look, it was a red flag. I was annoyed. I was about to kind of make an investment. I just discovered the CTO isn't full-time on this company. And her point was not the CTO had to be full-time before taking that investment, because the investment was what was going to enable them to go full-time. The point was they were kind of deliberately obscuring that fact. And it's the transparency which you mentioned earlier. VCs like to see that transparency, because then they can help you with the problem and build trust over that as well. Any other red flags with a team? For, if you've got four founders and one founder has significant equity and they're not really involved and they're kind of becoming ghost equity, that can be a red flag for an investor as well. So for Deeptech teams, be sure that you're looking at your shareholder agreements for vesting periods, time level of commitment. It's terrifying, Charlotte, isn't it? How many startups, really exciting startups, are failing at seed and stage and beyond because of something as simple as dead equity, which is a crying shame that it.
There are no often there are no hard lines, and with the right creativity and people who are genuinely passionate around the table, often there are solutions. So obviously it's best to have everything done properly in the first place, and have a robust strategy on how to sort of grow and scale. But we all make mistakes, and we all are learning as we muddle through these things. And so if you are a founder listening and you think you haven't done something right, or you think that something could be done better, be creative about ways to get there. Talk to people who could help you understand different pathways or different challenges. Hard tech, climate tech investing is different to B2B SaaS. And so, like I said, there hasn't been this plethora of exits for us to draw from. There isn't this well-trodden pathway of how things should be done. And so I think that because it is an industry where people are sort of more value aligned and principle aligned, there is that passion to find a solution for the right problems, in perhaps that there isn't a way in different industries. So I see it as from a positive lens of how can we fix this, and if it's something you really believe in, and finding the people to do it with.
And final question, Charlotte. When you get to your laptop at 9 a.m. in the morning and you see your to-do list or your diary, what makes you what thing are you going to be most excited about in your day?
I think what I'm most excited about is the collaboration that solving this climate challenge will require. We need collaboration across investors, across financing. Scaling climate tech needs different frameworks that lower the risk, attract the capital. And so there's a shift from early stage VC to later stage growth, private equity, infrastructure players. How do you bring together different types of funding, be it catalytic capital, family offices, venture debt, corporate equity, project finance? How do you really help these technology startups transition from that lab stage demonstration to commercial deployment? And I think that what we're learning and seeing is as these technologies are de-risked, the focus is moving towards these business model innovations, how to get these investable unit economics, how to tell this compelling story to address the funding gaps. It's the classic infrastructure returns at venture level risk conundrum. And so we need that collaboration across the value chain. How do we get those bankable offtake agreements that are so key to attracting capital, de-risking investments, and provide that demand and sort of techno-commercial viability especially where there's no, liquid global market. It's even collaboration with governments. They play a key role in public procurement and sort of enabling the policies required. We've just had the Clean Industrial Deal announced in Europe last week, but the governments can also do sort of long-term partnerships and sort of projects really to extend the sort of lifetime of these projects in terms of their revenue and financing. And so I think that it's that collaboration and working with like-minded individuals that I enjoy so much in the day-to-day life, be it founders, investors, operators, policymakers. I think working together to achieve that common goal is fun.
I can see that you love learning. I think if that's anything from your science background, it's being a VC is you're learning something every day, and I think that's just fantastic. Thank you very much, Charlotte, and to our listeners, you please do check out our other podcasts, which also speak to some of the themes that Charlotte's just referenced as well. And I think when we look back on this episode and we're asking, what is climate going to take? I think it's going to take deep tech investors. It's going to take investors with science backgrounds. It's going to take due diligence on tech, on market, on team, and it's going to take collaboration. Thank you very much for joining. Climate Takes Deep Tech Investors. Bro.